Let's get right to our guest, AllianceBank Chief Economist Manokaran Mottain, to get into the latest PMI data. Now, Mano, 1 year then of contraction for Malaysian manufacturing conditions, but a slight improvement in March from February. What's your assessment of these numbers?
Okay, first of all, it is good to see that it is recovering from the bottom, okay, 48.4. But operating conditions still challenging for Malaysia. And also recently, if you notice that the central bank has also been a bit conservative when they said that exports are growing at 2.4%. So suggesting that our current account surplus could be narrowing further and that kind of thing.
So on that point, you're saying Bank Negara is being conservative when it comes to exports here. We did see international orders pick up in the latest PMI numbers. Looking at the way the external economy is going, do you see this demand continuing?
Actually, for me, I have turned slightly positive because I look at a few incidences where a few factors that suggesting that there is a recovery by the second half of this year. If you look at the commodity prices have recovered, and mineral prices have come up, of the lows. And also crude oil is trading around 38.40 now. Recently it was trading even above 40 from the low of 20 something. Okay, so and also the exchange rate has recovered quite significantly compared to 447 at one time. Now it is trading around 387. It touched a high of 387 just yesterday.
Now, Man, I want to point out something else in the PMI numbers. We saw input buying slow down given the ringgit. And other concerns around exchange risks. Do you see that this kind of trend may continue?
For short term, I think it would likely to continue. But I think by the second half of the year, should you see stronger or firmer numbers suggesting that that we are on the road to recovery.
Now, we are marking today 1 year of GST.
Yeah.
What's your gauge of private consumption and whether or not we've really said goodbye to the effects of GST?
Actually, GST, whether you like it or not, sort of like has some impact on the inflation numbers. If you look at it, in the first quarter, just before the implementation of GST, as a result of the falling oil prices, inflation was below 1%. And now after that, it picked up, all the way. And now the latest number for February inflation is at 4.2%, almost double of what we have seen in the whole of 2015. So to me, I think because the income growth is not, matching the pace of growth on the inflation. Inflation is at 2% for full year last year, and then you have GST about 6%. So in a way that each and every one of us have gone poorer by 8%.
You see inflation normalizing after the first quarter, but I want to take a look at your forecast for private consumption. You see it at 3.3% for this year. That's quite below what Bank Negara is targeting, like 5.1%.
Yeah, I think Bank Negara on that part, I think could be, looking at more optimistic compared to us. I think we are seeing some more measures that are coming in. Recent levy increase is one thing. The other one is effective July, you will see adjustment in the minimum wages, and also pick up a first half of the year. I would say that inflation likely to hover around between 4 to 5%, and then second half of the year it should come down and normalize.
And this really is a year of two halves. Now, taking a look at post that minimum wage hike in July, do you see manufacturing recovering in the second half of this year?
Yes, I do think because as a result of the recovery in the external demand will help the overall sector, and that will likely, hopefully, it can help the cushion the impact of the higher minimum wage.
Now we got to take a look at the ringgit because we have been seeing some recovery, but there's still some potential downside risks given the way oil prices have been moving. We still have indicators from the Fed that we're looking out for. What's your gauge on how the journey of the ringgit will be this year?
Okay, if you see the last 1 week or few days, you can see the performance of the ringgit is largely reflecting the external environment, because this has followed what Yellen has mentioned, that she has indicated that the pace of hike in the U.S. interest rates will be much slower than any one of us had anticipated. Initially, there was an anticipation of 4 hikes. Now people are talking about I do think that two is possible, but there is nothing going to come in until September.
Now today we also got China PMI data in expansionary territory. Does this bode well for the ringgit and for the Malaysian economy?
Yes. I mean, the recovery in the Chinese economy is very important, for Malaysian ringgit. So, looking at even another factor that really helped the ringgit performance is the 1 MDB settling the debt and all that. So, whether you like it or whether how the money came in, all that, we are not bothered about it. But as long as there is a tendency, or there is prospects that 1 MDB is going to come out of the debt problem, I think that is a positive. But again, don't expect the ringgit to go back to around 320 and all that within a year. Because I look at it, maybe the worst come to worst, it is going to cross 380 momentarily, and then it will sort of like stabilizing. There is a possibility of weakening back, to above, slightly above 4. And overall, we will still see a better average exchange rate compared to last year.
No, we can hope that, but as you say, we may not see the 320 level, and it looks like we're now at around the 4 range. So thanks so much, Mano, for joining us today with your insights on Friday, April 1st. Happy April Fool's Day. That was Manokaran Mottain, Chief Economist at AllianceBank.